buy now or wait till early next year? That is a question that a lot of you out there are asking right now when you're looking at investing in property. What I want to do today is go through various data points, articles that have come out recently to show you why you should be strongly considering, if you are on the fence about doing it, why you should be thinking about doing it now as opposed to waiting. The obvious thing out there which has got everyone a little bit fearful is what is happening out there with interest rates. In a rising interest rate environment, the recent rate rise a lot smaller than previously at 0.25. And what we're predicting and seeing is that we're likely to see the cash rate, which is currently at about 2.6, cap out at about 3%, and even towards the back end of next year, start to even see that rate even come back down a little bit. But now that we're heading to an environment where there's going to be a lot more certainty around what the rates are going to be, and people are going to know what their repayments look like, that's going to bring a lot more confidence back out into the market. Separate to that, what I want to talk about today are a few factors outside of this, as I was saying, that aren't as mainstream, that aren't being reported as much, which is going to show why property values, particularly in certain parts of the market, are going to have a significant amount of price growth come 6, 12, 18, 24 months into the future. And some of the data points that I want to show you today that are going to be driving this are what's happening with the rental crisis at the moment, how supply and demand is going to dictate that. I want to show you some markets within markets, and what I mean by that is, as much as on a macro level interest rates are having an effect on the Australian market when you report it as a whole, but when it comes to property market, there's a lot of markets within markets, and they all perform separately to each other. So there's certain parts of Australia that have still been growing during this time. And what I want to highlight there is that as a sophisticated property investor, which a lot of you that follow this channel are, it is not about the property per se. It is about what is the strategy that you're working towards, and finding a property is to match that strategy is the approach. And at any given time, there's always going to be something somewhere in the country that's going to help make that happen. And then it's timing the game that is going to help you towards those long-term goals. Then after that, what I want to do is touch on institutional investors very quickly and show you what they're doing and what you should be following. And also show you one more data point that you should be really considering, and that's income relative to property debt in a specific location as well. And that's how you kind of pinpoint it. So firstly, I thought I'd just share this article that just came out a couple of days ago at the time of filming. And CoreLogic is predicting that the house correction is going to be done by early 2023. Once again, when they're talking, they're going to be talking about the market as a whole when they say this. So once again, there's going to be certain parts of the country that might take a little bit longer to correct. There's certain parts of the country that have already corrected and seeing price growth. But I guess just sharing this coming out from the biggest suppliers of property data in the country, and they're showing on a macro level that we're already going to see a correction early 2023. And once again, as a sophisticated buyer, we want to be getting in now while there's still a little bit of uncertainty in the wider market, so that we can snatch up some deals. So when the correction happens, we're going to be getting, I guess, when the correction happens and that once again the market finds confidence, and then there's, I guess, the Jones effect where people start following each other and then you get the price growth. We want to be getting in before that happens. So rental crisis. So this is one of the things that is, as an investor, firstly, why we should not be worried as much, even though we have had rising rates, because rents have in some places increased more than inflation, and in some cases, in some areas, have increased more than what the effect of the interest rates would have been as well. And I guess I do want to start by saying with this, ultimately this is quite a sad story, like what is like happening out there. Seeing a lot more wealth disparity between people that own property and the ones that don't. But I guess ultimately as property investors and what we're looking to do out there, I guess it provides opportunity, but it also, the more investments that go out there, it does help to a certain degree with some of the housing issues that are out there. But the main things to highlight as part of this article. Of course, there's the headline. But what I want to show here is that rents have now increased for previous 5 consecutive quarters. And when it comes to apartments, it's also been happening for the preceding 4. So that's like 9 months in a row, rents are increasing. And based on what's happening right now with really low vacancy rates, lack of supply coming in and migration happening, that is likely to keep on continuing. You can see here 2 of the key data points that I'm mentioning: low pipeline of building approvals to come, and also rebooting of immigration, which is going to bring 235,000 people into the country a year. There's literally not going to be enough properties to keep up with the number of people that are going to be coming into our country. So that's going to have the effect on rents. The lagging indicator that is then going to happen after that is this is then going to put an effect on prices, on property prices. And in particular, that this is where it's going to be putting effect is going to be on the affordable end of the market. Because put it this way, rates have risen, people's borrowing capacities have come down. So the type of stock that majority of people are looking at is going to be more in that affordable range. So when it comes to places like Sydney, Melbourne and Canberra, it's going to be the apartment market that's going to do incredibly well. And when you go look at some of your more affordable markets, places like your Adelaide and Perth, then you're going to get some of your more affordable house and land opportunities that are going to do well in those markets. Another article point in Perth, we're looking at lowest levels of stock in 12 years. And once again, that's just continuing. So just another data point just to help validate, I guess, what I was saying before. And I think scrolling down into this article, a bit separate to the rental crisis, but just showing you that even in the last month, those 5 suburbs that the 5 suburbs that had the biggest increase in price, and this is just in 1 month. Singleton, which is actually one of the areas that we are actually working on for our investors, that was the highest with almost a 4% increase in 1 month. So despite these rates increasing, there are other markets and other markets within markets that are still increasing in value. Now this is what I was referencing in regards to stock levels. And you can see here, this graph over here shows the amount of dwellings that are forecasted to be completed in the future. This article here references Melbourne in particular, and I guess this is happening all around the country, but this is Melbourne. And the reason I'm talking about Melbourne is it's a market that we're focusing on. It is the market that's going to get the highest amount of migration from international migrants coming into the country. International migrants, when they come into the country, on average spend the first 4 to 7 years in inner city markets. So the lack of apartments that are going to be in this area is going to put a huge pressure on the rents in that area. And then it's going to put a huge pressure on the value of those properties to increase as well. So this talks about rents, talks about immigration, and talks about the lack of supply coming in. So we're already seeing what that's done to rents and how much that's increasing them. The next of what is going to happen is this is going to start putting huge pressure on the values of homes to increase. Now, moving on, what I briefly touched on was talking about markets within markets. And one of those markets that we have been focusing on is what's happening in certain parts of Perth. It's the most affordable place in the country relative to the amount of income someone makes. Some of you may not know, but based on the average income per person, Perth is second only to Canberra in terms of income. And in terms of the average price of a home, it's the most affordable in the country. So in an environment where rates have been rising, places that have got income and also places that have got a large amount of properties that are owned outright, which a lot of these areas do, and a lot of investors shifting into markets like this has meant that Perth and a lot of areas in Perth have continued to grow. One of the areas that we've been focusing on, because we tend to focus in more affordable markets, is this one here in Medora Bay. And from this list here, from the most, it's definitely by far one of the more affordable stock, and it has grown 13% this year. And that's going through all the rate rises. And once again, that other suburb I mentioned, Singleton, is the next suburb over from Medora Bay. And last month alone, in 1 month, that one grew by 4%. So I guess here, what I really want to slow down and highlight is there's multiple markets in the country, and if you have a strategy or a goal where you want to work towards buying a dream home in 10 years, or having 150k of passive income in 20 years time, or whatever your financial goals may be, it's important not to lose sight of what we're working towards long term, and where can we find a property at any given market at any given time that's going to help fulfill that need. Now, this is another one super interesting. Once again, not getting as much attention in the mainstream market is what institutional investors are doing. This is an example of a group that's gone out there and purchased an entire block of apartments in Sydney. So this is a 43 unit development and has been purchased by an entire group. This is happening more and more. So not only do we already have a lack of supply, we're having institutional investors now come in, see where the opportunities lie, and snapping up large percentages of this property in one hit, which is going to leave less and less available for everyday investors and for people to live in as well. Once again, this is the kind of thing that's causing wealth disparity out there. But at the same time, as an investor and you want to be on the right side of that. And I would say big investors like this would leave clues about what you should be looking at as your next move. So once again, repeating, in certain markets, like in the Sydney market, the Melbourne market, the Canberra market, apartments are going to be the next ones to really start seeing a really big impact on value growth. And that is going to be because, one, the affordability of houses is out of reach for a lot of people. And with increased migration, this is where people tend to go first. And the affordability relative to what people make is going to make this a much more desired choice. So definitely something that you want to be looking out for. And I guess giving a lot of attention to. And just one last data point that I do want to share is when it comes to the wealth of Australians. And what this graph here is showing is the amount of your income the average Australian is able to save and put away. We can see here that this is at June 1st, 2022. The next quarter will come out at the end of this month. And we are at almost at the highest point, right? We had back in, between July and October 21, almost in line with that, we have got the highest amount of savings sitting in the average person's bank account. So there's a lot of people out there, which reflects what we're seeing. There's a lot of people out there sitting on the fence, following the masses, not acting, but there's a lot of people out there with cash just waiting for the right time to jump in. And what's going to happen is once a FOMO kicks in, they start other people doing it, there's more stability in the mass media, there's going to be a huge influx of investors coming back into the market, driving these prices up. What I'm urging you to be is be a sophisticated investor, get in there before this happens, explore the opportunities that are going to be there in the affordable apartment market specifically, and in certain parts of the outer suburbs, affordable house and land as well. Ultimately, to answer the question that we started with, should you buy now or wait? If you're clear on what your strategy is, what you're trying to achieve, and you're working with it is affordable for you to get into the market, then I would be looking right now for where you can get a deal, get in, and watch what's going to happen over, mark my word, 6, 12, 18 months. You're going to start seeing some pretty significant price growth in your investment. All right. Hope you enjoyed that, and I'll see you in the next one.